Hello, everyone. Here is Martin from Crypto Valley Association in Zug, Switzerland. It's great to have you here on our webinar, Meet the Blockchain VC. It's the 5th time we are doing that. I'm very honored and happy to have through three great speakers, Jasmine, Zhang from A&T Capital. A&T Capital is an early and growth stage fund backed by some important companies and also very early backers and influencers of Bitcoin. Then we have Dominic Briggs from Blockwall. Blockwall has 2 funds, as I've seen it, one equity fund and also a token fund, and is focused on Web3 and decentralized technologies. And last but not least, we have Sheynkman from Leyden Ventures. He invests in technology companies, mostly in developed markets and in early stage opportunities. Welcome, all 3 of you. Great to have you here. I also want to encourage our listeners, please, to submit questions and propositions in the Q&A section of the website. And it's great to have you here. Excellent. So I would like to start my question to you. Please let me know why do you invest in blockchain technology?
Dominic, you want to take that one first? I'm going to throw you under the bus here.
Grace.
Yeah, of course. No worries. So thanks a lot, Martin. Happy to be here. And Jasmine, Gary, looking forward to the discussion. So, yeah, I mean, I was in management consulting first. So actually the first reason why I looked into blockchain was because I was focusing on process improvement. So very boring, this lean management kind of optimization job. But the efficiency aspect of blockchain triggered my interest first. That was around in 2014, and then slowly understood that we have become like very highly dependent on internet-based solutions. And I mean, we all know this, the existing solutions cannot really provide like a trustless environment. We have data monopolies, privacy abuse, fraud, legacy systems, which are extremely inefficient. Data hacks have become a regular news. So, in order to gain control back, to increase trust, transparency, efficiency in processes, but also in security, we see that a more decentralized approach makes sense, and blockchain as kind of probably the term most known, or distributed ledger technologies, is like a perfect solution for that. And there are, of course, many different ways and use cases you can use it, and there's a whole tech stack you can invest alongside of. But like that's the core, that we believe that a more decentralized digital future is actually to the benefit of all of us. So Gary or Jasmine.
Please, if I may, just please talk each other. I will not invite each of you just one after the other. However you feel, I think we'll get organized by ourselves completely.
Jasmine, before you go to sleep in Singapore, I think it's you.
Okay, because I'm in Singapore and it's pretty late. So like before I say some stupid answers, I guess like I take it first. I think like, besides like what Dominic has already mentioned, like, so many advantages, so many cool things like, blockchain could do with this technology. Honestly, I think to me, it was really at the start because of the price surge of like a Bitcoin and Ethereum. So you started to get notice of like this like like technology backed kind of like applications, and then you started to look into it, you felt like, oh, it's really interesting because there are so many different like innovations, and you started to talk with people who are working like in this kind of like a field. They are all really like smart and talented people, and you felt like, oh, that is a place where the future is, because it gathered like most of the smart like brains and so on. So that is definitely, you know, like one reason for me to really get the initial interest in this like a place, and then continue like, you know, really looking into and backing all the founders of like our portfolios or like friends companies. So yeah, that is just like very direct, I think, answer just to be complimentary of like what Dominic has already mentioned. Yeah, Gary,
I like that you like said, like, you know, it's the future, right? Like I feel, you know, every generation of software, you know, we kind of unlocked new stuff that we didn't know how to do before. And, you know, for a very long time, you know, early 2000s, be like, oh, you know, we're going to be a firm, we're going to be focused on the future, we're only going to be doing cloud software. And obviously, if you invest in enterprise software, of course, it's going to be SaaS. It's not going to be on-prem anymore. And for a very long time, if you're investing in the web in the late 90s, you were investing in basic communication and publishing technology. And then lo and behold, we had the compute and the bandwidth to all of a sudden have applications in the browser. And it completely transformed what we can and cannot do, you know, as you know, I think as, you know, people that work and communicate and play together. And so I think we're on this cusp of yet another, you know, thing we can do. And I think transacting, just basically moving units around and accounting, is the absolute most boring thing that you can do on the blockchain, right? You know, we're talking about, you know, shared compute resources. You know, we're talking about really complex operations. A 14-year-old can go and code up a hedge fund product that was only previously available to billionaires. And so, you know, I think that there is this, you know, next, I think, decade, you know, or at least 5-year cycle, we're going to see a whole lot of new applications that move from the realm of pure trading and kind of very nerdy applications to just being, you know, part of our everyday life. And hopefully eventually it will disappear and you'll never have to say, hey, are you a blockchain investor? Because everything will touch the technology in some way, much like everything touches content delivery networks, or everything touches, you know, large data centers. You know, that was just not something that was possible, you know, 15, 20 years ago.
I think, Martin, you're mute.
Thank you, Dominic. I hope it won't happen too often this time. So thank you for your insights. Now, if I see what you are doing or where you're investing and how you see a blockchain technology, now I'm wondering, on what are you focusing on? Is it on new protocols? Is it on infrastructure, blockchain infrastructure projects, or is it mostly in application, second layer protocols, etc.?
I guess I can start again.
Mm-hmm.
So what I said before, like the entire tech stack is interesting, and the service ecosystem as well. It's just the question on, do you want to cover the entire market? Then you need kind of the infrastructure layer and the kind of application layer to get exposure to. And that's how we build our products around. We wanted to give investors the opportunity to get a very diversified but complete exposure to the market. And then the question is what financing mechanism, if you can call it like that, is the right one on which layer. So if you think more decentralized networks, protocols, then that would be the perfect example of token investments. So if you want to cover the infrastructure side of things, if you want to cover the protocols, then a token-focused fund makes sense. And there are very exciting opportunities, and dependent on use case, they are evolving as well. Similar, like we've seen in the Web2 world, you always had this enhancement of infrastructure and a continuous feedback loop between applications and infrastructure. So infrastructure is reaching a certain limitation, and then it kind of evolves again. And with every new step of infrastructure, which blockchain is as part of this architecture, you have again a new universe of business models. And that's the interesting part about application layer, that you now have software as a service companies looking at blockchain as technology platforms and using it to build a better system. But at the same time, you also have like the entire service ecosystem, which is becoming more institutional and which is absolutely necessary that the crypto ecosystem works. And the latter two, like the applications and services, they are equity business models, so not real true token cases. And that's where you would see more traditional venture funds going in. So on both ends, it's I think there are great opportunities, and as you said in the beginning, we have funds targeting both segments.
If you have a situation where you have an opportunity to deploy through equity at first, but then there is a token issuance afterward, how do you split the allocations between your funds? Does the equity fund then take the token position and have to create liquidity, or do you swap it out?
No, it's we actually also would take, if the value creation is in the token, but the equity participation is a means to an end, then also the token fund can take that equity. It's more about where is value accrual happening.
Yeah, makes sense. Jasmine, do you guys do kind of both tokens and equity? Do you guys mix?
Yeah, so we do like mix. I guess probably like, like a German-based like a fund is like more restricted. So that's why I'm not sure, like maybe that is the reason why like, Blockwall is doing two different ones. But like we, for example, like I think ours is like a more typical like VC fund. So it's like based in like a Cayman Island. So like we do a mixed can. So like we can do like both like a token and equity and directly. So like I think for us, what Dominic said, like what I really like is like, it really depends on whether you want to like cover the full spectrum. And I think it's really hard like for, like a team of like, for example, like us, we have like 10 people to cover really every set, because I think whole blockchain space has so much like, opportunities, and it's just like hard for everyone to be expert, really understand each single like field. So we try to take advantage of like, our GP's like a background and also like our LP's background. So I think at the start, like Martin mentioned, like we are backed by like really some of the biggest like a fintech giant from Asia. So definitely we look a lot into like a finance related like services, like projects. So both like CFI and then DeFi, I think there will be like really interesting stuff. I remember there has been a time, like people debating like whether we should stand purely on the CFI side or on the like DeFi side. But now like, with our portfolios, we really see like, there's this kind of like merge like between the two sides, because they plan to actually also like launch each other's like product in their own like platform. So that is the finance side like we are focusing on. And we also looking into like a lot into like NFT and metaverse like stuff, because we have like some of the traditional background like LPs. So we see like how much like interest like they have been raised through like this kind of like quiz time with NFTs, with metaverse, because it's so easy to understand, compare with other like layer ones, layer twos, like bridges, like other interoperability like stuff. So it's so easy to have like the new like old money like to flow in. Everyone is interested in this area. So that is so many things, with our background, we could really help like our projects, our portfolios to open their door like to a lot of like Web2 like big players as well. So that is the second place we are looking at. And the third place, myself is also like quite bullish on, is like definitely Web3. And specifically, I think SocialFi, because I think with like a SocialFi, everyone has like say Facebook or Twitter or like Instagram, that other place where everyone post so many of their personal stuff like over there. And that is such a like a kind of like a business model where for Web3 like projects, they can really take use of like these kind of like ownership to make it really like owned by the person like who owns all of this data. So, and there are so many data like around there. So like we definitely think like like for Web3, for SocialFi, that is something like really interesting. So that's why we have some portfolios in the pipeline, like we want to like invest. It's also because like our GP's like background is we have a lot of like experience with like Facebook, Twitter, and Chinese version of like Facebook, which is called like Renren. Maybe someone knows it. So we want to basically stand from the point of the view of our LP and GP background to look into the areas where to choose from like the extensive like areas of like opportunities in the crypto space to invest in. To be summarized, basically, yeah.
Super interesting. Maybe, and then I also will, of course, we also want to know Gary's opinion, but maybe Jasmine, you talked about NFTs as an investment goal for you, where you, and now I'm wondering what exactly, or is there a focus in NFTs, or where do you say the use cases, maybe also for the others? I mean, now we talked a lot about art NFTs, paintings, etc., player cards, etc. But is it only this space, or are you going further?
I feel like NFT is such an abstraction, right? Like we have these tools that are available to us, and let's say they're NFTs, they're Twitter and Discord, and a couple of crappy bots that help us authenticate people into channels. And the projects at the end of the day, just like in, with anything, it's a product of what's the commercial mindset of the team. And if they are a serious group of people that are building a company, which is why, by the way, we like equity exposure, because we like the legal marriage, even if the value is generated in a token, we like to have that legal relationship with folks. There's NFT projects that are just fun, and it's okay, because again, this is a cultural moment. This is a first use of blockchain that's not purely for nerds, but also you can use them to have membership. They can be fund units. I think our entire business of deploying capital is going to shift to on-chain and NFTs, because it's a better widget than limited partnership agreements, and those are horrible documents, and we never want to have to deal with them. And that is a great use case. But also fashion, gaming. I mean, there's going to be a bunch of different businesses. And I think, again, if you are an investor that's focused on gaming, you're going to find a use case with NFTs. If you're an investor focused on equities markets, you're going to find your exposure there. It's just a widget. And then the business model really has to do with the commercials of the team.
Yeah, I think on NFTs too, I don't know when it really was. I think the buzz about the terminology of NFT came up rather later than the technology itself, because in the end it's just proof of ownership, right? Certificate, and that is the powerful thing about that technology if it's really implemented correctly, so that you have copyright protection, IP, and I think that's something where also people have to look out for, that not every NFT out there is worthwhile buying. And it will have the same involvement than many other new trends, that it will migrate to those platforms which have real authentication, with those wallets which are truly holding only those correct NFTs. But one example, just to give you an example, on the real world application, we had a discussion with a large automotive company here in Germany, and they were thinking about how can you use NFTs as brand building, for example, and think about the design process when you are driving a new car. Most of that work is not monetizable, but it's pieces of art itself. If you turn these into NFTs, which this auto company is looking at, then you're able, from a corporate point of view, you can monetize this piece of production, and you have a great brand building mechanisms with your clients or car buyers. So there are many ways to doing this, or in the startup ecosystem. If you think about virtual share option programs, there's a way to completely revolutionize ownership, also through NFTs, for example. So it's not only about art, it's not about in-game swords. There are so many different possibilities to use it.
Yeah, if I may like add a bit, I think for NFTs at the very start, we saw like, other, most of like the really big like Web2 like internet companies were trying to like enter like in this space, and we were wondering like, like they were so aggressive like in the field, and we saw like, I think NFT, one of the usage of them is really it extends like the categories of the on-chain product or asset. So it enables like previously some of the assets would not be able to put on chain, just put it in a more simple and logical, easy to be understood like way. So, and all of these kind of like NFTs is also, I think as I mentioned before, it's just like so easy to understand, and it's very easy to go really visual, like among the crowd and so on. So like, like people started to do so many interesting things like with it. And what Gary said, like, for example, like a way of like a membership, for example, like OnlyFans, right? And it was like, other DeFi like derivatives like on the NFTs, they're just like enable so many different kind of like possibilities. So I think like, the more assets categories like to be put on chain, there are just like also like more audience like to be here. Just they provided so many more like options for the users here.
Yeah.
And also easy to attract the more, like Web2 like audience, because just like logic, easy to understood. Yeah, easy to be understood, basically.
This is going to sound incredibly wonky, but I'm really looking forward to lawsuits in our space so that we can have some case law. Right now we have the technical, ability now, I think, sitting here in 2022 to go and create everything from funds to option pools, to all sorts of ownership mechanisms on chain. But how they actually parlay into the real world, these things live as foundations, as SPVs, as holding companies, as LLCs, as all of these things. And those documents are quite fascinating as well, because it's basically a promise to reference a number on some network. And the idea is that someone who is part of a jury, and the two sides of the opposing counsel will be able to go and audit that contract. We really don't have proper on-chain arbitration or really any case law. So really everyone is just trusting that this stuff is working. And I think this is going to be kind of the moment between, like, we all keep saying like institutions are coming, that's kind of, that's been the mantra for, seemingly forever. But I think we'll see dramatic shifts in your pension funds, in like your retirement funds, kind of the real big boy money. That will happen after case law. So until then, we'll have volatile and I think huge gains. I think if you're interested in the space, this is a great time to be here because the volatility means there's an opportunity to do very well. But stability and huge widespread adoption, I think, will come after just extraordinarily boring stuff like case law.
Yeah, I mean, we will see, of course, let's say in continental Europe and other parts of the world, we are not only based on case law. We have already some pretty comprehensive, at least in some countries such as Switzerland, some comprehensive legal framework. Now not specified on NFTs, obviously, but let's say especially like this interaction between now the new technology and the current legal questions which have to be addressed. And so, of course, this is, in my opinion, or in all our opinion, it's very important to have like a comprehensive understanding of the legal framework, what you can do, how is it transferring tokens, and especially, I mean, you've mentioned it before, let's say connecting IT rights to tokens. What does it mean? Then the transfer, is it an asset? Is it the utility, and so on? So lots of questions obviously are related to this, and I think we all hope and work and also lobby to have a clear regulation in this, and I think now also the US wants hopefully to move forward with that, because the clearer the regulation it is, the less disputes we have, and disputes often they're lengthy and painful and can block off also many developments. So now I would like to know a bit more also of your funds. Maybe could you tell me, I mean, how big is your portfolio in size, in capital, but also in how many companies do you invest?
Yeah, so in total, it of course depends on the day of time when you look at it. But let's say we're above 120 million in AUM with different products. We have invested with our first fund. We have invested around in 27 companies, or in that case, it's more SAFT agreements protocols. The second equity fund, which is still in the beginning, so it's still fundraising, going to close finally in June. We already have done 3 investments there. A 4th one is coming soon, and we're building a portfolio of 30 companies in that one. That equity fund is more pre-seed, seed focused. And as I said in the beginning, it's more the application and services for the crypto ecosystem, and the other one is more SaaS B2B. And I saw some question on the side with that if tokens are the real mean to valuation. Well, it depends, right? It's that's exactly the differentiation. You don't need a token in a tax software as a service business where you're filing your crypto tax report, or in blockchain analytics, you don't need a token, right? They are traditional ventures. At some point in the future, maybe there will be an earlier liquidity event due to security tokens, but the inflection point on that has not really come yet. Yeah, so that's mainly the focus on the side or the size of the funds at the moment.
Sure. We're a rolling fund. So we'll deploy to 3 to 5 companies, let's say low 6-figure checks on a quarterly basis. And then we'll put together, let's say 7-figure and above SPVs maybe twice a quarter. And so, those tend to go to our LPs. Broadly, big fans of what AngelList is doing in the space. I mean, I think single-handedly as an organization have done more for venture capital GPs, just like building tools for us than almost any company. But yeah, big fans of them. But yeah, we'll either write $100,000 check, 3 to 5 times a quarter, or be in the north of $1 million check, let's say twice a quarter. Yeah, we've been around for about 14 months now. Yeah, so we're relatively new.
I think we are probably like newer than Leyden. So we started actually last year in April. So we were probably the youngest, so only around 10 months, 11 months old. And so we started in April last year, and we just closed, announced the news of our first fund closure of $100 million. So it's as I mentioned, it's a token plus equity fund. We have done 30 deals until today, deployed around 30 million as well. So I think in general a bit aggressive for fund 1. It's also because all of us general partners have been in the space for some time, so we have already the pipelines accumulated, and it's also our strategy is actually to invest from a pre-seed round until a B stage. So we want to back the founders from the early days, so really early, and then to be able to double down for the every other round until B. So that is basically restricted by the fund size because we are relatively small, 100 million. And so for pre-seed, we do usually 100K, 250K, something like that, and we can invest up to 10 million to one single project. So yeah, that's roughly about it.
Cool. Congrats on the fundraise.
Thank you.
Yeah, 100 million is not a small fund.
Probably compared to a lot of existing North American ones is still much smaller. But and also like there are so many new funds like in the space, and so many new money, like old money is coming in. So yeah, I think we just want to be contribute among them as well.
Super. Yeah, that's very great achievement, and in 10 months. But then maybe here my additional question: who are typically your investors? Is it qualified investors? Can also retail investors join your fund at the ticket size?
So for us, we have actually mostly like institutional investors. So like over 70% is actually coming from the institutional investors. So like a big corporate and so on. And we also take like 30% around. It's also like have to be like qualified one, because we are kind of have to go through like different this kind of like FA fundamental like stuff. So they need to be like qualified for some kind of like rules, which difficult to say. So it's around like 70%.
Yeah, for us, we are BaFin registered, which is the German supervisory authority. So you have this rule of semi-professional investor, which classifies as everyone who's able to invest a minimum of 200,000 euro, or you are a professional investor, and then you're kind of flexible with that. And typically we have private individuals, many of which have been founders themselves successfully, or single family offices, or even other venture funds who want to get exposure to deal flow, or to learn with us as a fund. Institutionals, not too much yet. We have one industrial holding, we have one corporate. We're talking to some institutional investors now, but historically it's more private individuals or single family offices.
No institutions for us at all. We are entirely family office, mostly founder and entrepreneur backed. We're rolling funds, so it's angels make sure that you are accredited. Now, if you're not a U.S. citizen, their bar for that is pretty low. But we accept pretty small checks. We try to democratize it as much as possible. We generally ask, we're not too fussy about how much people want to invest. But we do ask that they invest for at least a year, for 4 quarters, so that they get exposure, over a full cycle of us building a portfolio for them. This is why I love like the AngelList products. Our overhead in managing, the net additional LP is basically zero. People can self-service and subscribe on this platform, and people can wire you money without ever talking to you, which is kind of incredible if you think about it for venture capital. But I think like this is where we're all going to be going. I would love to be able to on-chain follow an incredible trader, into their NFT and other collections, and, into their equity positions, and be able to just subscribe and deploy capital alongside them. And I think we're not quite there yet. We have a couple of startups that allow you to follow portfolios. We have obviously like these rolling funds where, the GPs, we make significant contribution ourselves to have skin in the game. But, I think for all of us as fund managers, like the future is going to be much more fluid. Which is gonna be cool. I dig it.
Great, thank you. So I wanted to ask also some question now from our public. So I have a question from Stefan, and he wants to know from you how you see investments in the educational tech, and especially also in the metaverse.
Maybe an example of metaverse, because it has been discussed more on a futuristic gamifying way, but just to make an example how it can change a lot in traditional industries. So talking with a big German corporate on this as well, and they're actually already using something like this. Think about digital fairs, right? At the moment, you have to travel around the world. Companies spend millions on showing their products in different parts of the world, and they have their whole sales staff going there. What I've seen was a demo where and it's actually in use, where you can walk through a virtual world. You have staff, salespeople interacting with you. You can show products in 3D, turn them around. You can directly buy them in there. You can look at videos. So it's maybe it's not the full-fledged metaverse yet, but it enables for me, in this example, a future of work where you can decrease costs. It's a more sustainable way of working. So metaverse, not only in the gamified version, has a lot of benefits for traditional companies to use it. And EdTech, I think, was the other. Yeah, especially if you see at these, in the beginning, play to earn models, there have been models coming out where it's somewhere play to earn and learn models. So if you can gamify learning, that can have a huge effect. Of course, it has to be set up right, and incentivizations have to be right. But I've also seen it in HR and recruiting tools where you can have this EdTech component, and actually in a playful way, you get a 360 assessment on your capabilities or what you have to work on, and that's so both topics offer real-world examples, and we're not far away of actually using those, or which are already being used. So yeah, that's my opinion on those two topics.
Cool. Should we jump on to the next one?
Yeah, exactly. We jump on to the next. Or do you want to say something? Sorry. No, I think we could jump. Yeah, maybe Jasmine. Yes.
Yeah, so I just want to add, because I'm not sure, like, if I understood it right. I mean, in terms of like education, like a tag, but my understanding might be something like Rabbit Hole or like Earn, right? I mean, the one later got like acquired by Coinbase, right? So like, I think that kind of like education like tag is quite like needed in a space where you can. I really enjoy like the model where you, for example, come across like a product, you don't know how to use it, a protocol, like you don't know how does it work, and then you just like, you know, try it on, and then like you earn some of the native tokens like from them. So like I think it's pretty educational, and also it just like, you know, looks really user friendly as well. So it's pretty easy to get on board, just like more users and the ones who were not familiar with. And I think, you know, like in terms of like with metaverse, because I also saw like earlier there were questions asking about like what is our view of like NFT powered like Web3. So I was thinking, you know, we like as a venture capital fund, it doesn't make so much sense, especially for us. We don't really do a secondary market, so it doesn't make so much sense for us to say, like, for example, like invest in like a punks or apes, you know, like this kind of more, you know, like this kind of like NFTs. Rather, you know, just more functional like NFTs. Like this NFT can be used like in certain kind of like ways. So one of the recent project like we have invested in, so they combine like, you know, NFTs with say, so it's like a Web3 version of a Gazettown plus Roblox. So you have like your NFTs, and then well, you have like a functional utility kind of like tokens every time like you need to consume like this kind of tokens, so that you could send out like an invitation invite to the person like who want to join like your space basically. And then like with this, you could also like play games like with you know, like a different like a friends of your network and so on. So it just like, you know, give it like more functionalities so people could spend more time like, you know, with the NFTs. So that is the kind like I was like having in mind. It's just like now they're kind of like just walking around show galleries or something, rather, you know, just empower it like with more functionalities. So that is the kind of a metaverse like we have like just assume have in mind basically. Yeah.
Yeah, we have the interesting, thank you. We have another question from Jasper, and he's mentioning that he raised in an ICO in 2016, or he was funded by token sales. Now he is approached by VCs who are interested in investing in his company, but obviously he has now many tokens on his balance sheet. So he would like to know how you would look at such a situation. If there is, yeah.
Or Gary, did you want to go first? Or?
Sure. I mean, look, I think the answer to all of these types of questions is always it depends. You know, I think you would value the treasury, you know, depending on the transactional value, you know, the listings on exchanges, all this kind of stuff. You know, you can have the biggest treasury in the world that might be worth something, but if there's really no liquidity, you know, if you try to capitalize the operations of the company in the real world by hiring people, you know, you might trigger, you know, a collapse of the pricing, right? So, you know, I would kind of think delicately, you know, about the valuation of the company and think what is the value of the business that you're creating at the end of the day. And, you know, if you have a massive treasury, you know, why do you need, you know, institutional or, you know, other forms of professional capital? And if it's for operational support, you know, it's one thing. You know, if it's to capitalize operations, it's something else.
Yeah, and
if I may add something here, maybe also for the other thing, it's not on, I mean, these tokens, I think they're not a treasury, no, it's more a liability. If you sell tokens and, you know, you have something outstanding and you have new investors in your equity.
We had similar cases, companies which raised tokens in 2016 to 2017, and now the tokens aren't worth anything anymore. And then now, in order to continue with the business model, they had to raise equity. And I mean, the reason at that point in time was there was no real value in the token in the first place. So of course, kind of the token holders are pissed because there's no more value in that token. And then this company tried to think about, okay, how can they keep the community at peace, of maybe offering also equity to them and moving the entire business model to equity to continue business operations. So it's really about what Gary said also, is there any worth at all or any sense in having that token in the first place? If yes, then, and if there's value to it, then yes, it's a treasury, and you would probably, as an investor, buy equity, but also get a certain portion of the treasury tokens. So it's really a question on what the business model is, where's the value creation. If it's only in equity, then the token side has no worth. And then also a VC wouldn't value that. So that's always the first question we ask when investing. Does a token model make sense? Is blockchain at all needed? Because there are cases where blockchain just isn't that extensive step of improvement to a Web2 based model. So I would think about all these questions and how you plan to build up your future business model.
Good. I have another question from Nicholas. He's building a play to earn game and he would like to know your thoughts about NFT games, especially play to earn like X Infinity, Star Atlas, etc.
You want to go?
Jasmine, you want to take this one?
Yeah, because it's really funny. I mean, in terms of like Axie Infinity, I actually met the founders like in 2019, like during like ATHCC like event, and that probably is my biggest like you know, mistake in like not investing like in them at that time. But I would say like it's really hard to say. I think like this is like for games, like you know, preference is like sometimes very individual. There are certain kind of games people like to play, spend time like in it. There are, you know, like some kind of people just don't like it, for example. But like for me, for example, at the moment, I don't know how it is just to be easy for someone to spend initially, I don't know, 1,000 like US dollars, like to have the initial like input to play a game that is probably not so interesting as some games like in like a PS5. You know, like just from like my perspective. So, and that's why like you see like there are so many like guilds like in the space, because they have to organize, you know, like people to do like this kind of like operational work to just be playing there. So I think like, you know, like one of the thing we have always like, you know, when we invest in like a GameFi like a project, we always see, first of all, because we look into like pre-seed, like a very early stage. So we always see like, for example, like whether the team is like really, you know, have shown like a proven track record. So they can build like at least like, you know, fun games to play, because people are not machines. Like they're not just be there to, you know, press and so on. So like they need to be like really fun, like for people to play, and really like a doable, like kind of like games. And also like, I think secondly, because like, you know, these kind of like play to earn games, one difference like in Web3 is like there is tokens. So how do you design your token economy? That is also pretty important. So how to make it really utilitized, right? So that is the two things that we look at when they are really like early stage kind of projects. But I think like most of the GameFi projects we have invested in, it was like last year. And now after like a few like investment, we also started to be like really, you know, like cautious in a way to check just like more criteria like in this field, because you see Star Atlas, it looks really good, but it takes years for the game to really launch. And then who knows what will happen, like, you know, in the market, there can be so many different like possibilities. So I think at the moment, like a play to earn kind of like model have to be like really innovative and really like interesting, unique, to be able to like really catch people's eye, because there are just so many games like to be there. So how to really design a fun game and also with like a functional token economy, I think that is pretty important.
I'm glad you answered this one, because we've made 0 gaming investments.
Like, honestly, we have invested in, they are really like close like networks. So we know the founders pretty well. So, you know, like we know like they are long-term ones. So if you are to be there in the market for only like, I don't know, 1 or 2 years, that is definitely not our target, because our fund is also like 10 years like fund life. So we can wait, we can have like the patience, just like, you know, for most of games, as long as you really determined, be there, and founders were recognized, we can wait for you for like a, you know, like a long time, like enough, just like into show like you could really build like a real game for real people, human to play. Yeah.
Thank you. I have another question from Evangelos. He's referring to a statement of Dominic regarding the security token and why they did not take off yet. And he wants to know your thought, why, and if this is the case.
That's a very good question. I have not found a real answer to that yet. We've been looking into the security token space since 3-4 years, and I've seen many startups in the space. And if I guess an answer would be that the biggest bottleneck for me is the liquidity side of it. So we've seen many approaches where you have the tech plays, or you have those companies helping to build the tech layer, so more as a white label solution. We have some which approach it in a reg tech layer, so where you have tech and regulatory environment. And then you have the other layer where you have the more secondary layer, I would call it, where you have like the actual projects being tokenized or assets. And then you have the more customer-facing layer. So this would be kind of the stack in this embedded investment security token piece, and all the projects where we have seen securitized assets. These assets have been not high quality assets, so there's very little likelihood that you have customers really buying that or investors really investing in that. and you need different backgrounds, different track record on every level. So on the tech side, you have to be very good and know on what protocols to build. On this secondary layer, you need more the traditional finance background to build out that layer and really be able to judge the investment character. So it makes no sense to tokenize any real estate on the street, but it has to be a good asset. So take Moonfair, for example. I don't know if you know that business. They're offering joint investment into private equity funds, for example. They are so successful in a Web2 based model, choosing these assets, and this business model could be tokenized, for example, as well, choosing those assets because they're all from that industry and they're taking this due diligence and quality approach for them. But once you have invested in a security asset, there's still the lack of transferability. So there's no exchange or liquidity market with enough liquidity to enable that exchange. So at the moment, it's still, from a German point of view, if you have to sell something, a security, then you have to go to the notary, for example. So there are certain efficiency aspects just of using the technology. But the real making physical assets liquid, that part has not come yet. And I think it will come when I think of Deutsche Börse or Stuttgarter Börse. They are building platforms like that. The moment like such a highly secure and big marketplace will become online, I think that could become an inflection point.
I'll be more forceful. Only finance nerds care about STOs. Investors don't actually care. Every single investment will be an STO, but by the time that happens, you'll be buying STOs through Robinhood and you won't be able to tell the difference whether it's equity or not. The problem now is that if I have primarily my gains in crypto, then purchasing, an STO, with my hard-earned volatile crypto is not the best yield and not the most interesting thing that I could be doing with my money. And then on the other side, if I'm a traditional investor that actually cares about a compliant offering, think about it from a roadshow perspective. Let's say I'm doing an offering, I am, trying to build, an SPV for a hotel or for a company or for a fund, and I'm going to investors that actually care that this is a regulated offering. Now I have to explain to them why I'm not doing a normal offering, because I am now expecting them to have all of this infrastructure around custody and interaction with me in order so that they can receive and use this token. So for super traditional investors, holding tokens, without proper custody and all that figured out is extra hassle. And for crypto native investors, the yield play is just not that interesting if it's a piece of real estate. So I think what will happen is that, yes, absolutely all equity will be tokenized, but it will become completely invisible. And I don't think we'll have this big push by institutions to be counterparties without having intermediaries that will make it basically indistinguishable where they're buying a piece of equity or a piece of tokenized equity.
And maybe to add to that, access is a huge point. So if you have an asset where normal investors don't have access to, right? So big funds where minimum investment is 40 million or so, or you have very large unicorn type private assets, let's say SpaceX or N26 or so, you want to invest in that category and you have a tokenized form of that. If it's about limited access for many investors, then a tokenization approach can make sense, but you need that level of quality first also to attract and build a positive experience also around that.
Yeah, so short answer, we're not there yet.
Yeah.
Jasmine?
I think security token is not really a field for me. I didn't really look into so much like in that. For us, like we have been like actually primarily like looking into more like a native stuff, so like on-chain kind of like product. I think it's just like take time within the time of like our fund life. I think that is probably still hard, but like for the future it might be. But we just like more to say like a practical look into within the fund lifetime.
Yeah, I think this is absolutely interesting here. Also, a response which also reflects a bit what also Gary and Dominic said. I think also first thing is, I mean, that we have in the traditional markets, they are not so inefficient. No, if you want to have a real estate exposure, you can easily buy a real estate fund, or you can buy an index product from BlackRock without no spread very easily, and so on. So probably the need is not really there. And then obviously also what Gary said, I mean, the fantasy is not in, let's say, a real estate investment with a 3% yield per year. If you can go into tokens where you gain that per day or per hour. And of course, also, I mean, seeing who are until now the token investors, I think they're more interested in this exciting stuff than in the boring stuff until now. And probably that's why, even though there have been some interesting ventures, I mean, the demand, as far as I saw it, the demand client-wise was not really here, huh? And then obviously we have still the problem with the whole with the exchanges that it's of course security trading is burdensome and requires special regulation and so special licenses, which you do not need with a utility token or with a pure payment token. Exactly. So I think these are the main findings. Now I have another interesting question from Frederick, one which I also wanted to address anyways, and this is, what are you looking for? I mean, we have many also startups here in our audience, and they want to know, what do they have to do so that you could invest in their product, in their token, in their equity? What are you looking? Is it the idea, the business model, the team, the tech, the mix? What catches your attention if you get the file on your desk?
It's always the team. I mean, I think that's where I think every investor has to almost start, because, ultimately a people business, if you walk away, kind of the stuff stops working. But, to the startups on the feed, we all have our own products that we've sold. We also went and fundraised, right? And we sold a very specific strategy and a portfolio approach. And so very frequently, a no, has nothing to do with you, but has to do with your fit within the portfolio or the model or the strategy that, that we've sold to our investors, right? But I think for everyone, it's, you're a serious team of qualified people building for a big transformational market. And you're intellectually honest with yourself about the value you're creating for your constituents or your users.
Yeah, and it also it's a lot about stage, right? If you're raising a pre-seed, then it's definitely mostly team, the idea and how you can execute it. I mean, if you want a structured pitch deck with kind of the problem statement, the solution, also why blockchain, right? And don't create a token if there's no need for it. So that really think about the business model. And then the further you come in terms of stage, then traction starts to matter. So there are great studies also. You can Google quickly on typical KPIs an investor would expect at seed stage or at Series A stage. So be aware of whatever you're raising. It's the valuation at a certain stage is only kind of the investor giving you the benefit of the doubt that you are able to achieve the KPIs and valuation for the next round. So go-to-market strategy has to be sound, and within your capabilities as a team, you have to be able to prove that you are able to build that startup from your step where you're into the next step. avoid only getting feedback on your product from your closer inner circle. Really talk to customers, your potential customers. Try to figure out what value can you give to your customers, and then figuring that out is again the purpose you would need.
I agree. I think like team is definitely like something we're looking into it. I mean, and to be like also like more specific, I think like the kind like we really like is like the team has already some experience like in the field in the crypto space. I mean, this person have already you know witnessed like you know the cycles. So he's not like the kind of like founder. I mean, I'm only saying like just to be more specific and also more ideal, that you know has been like already in the space to see like witness like the cycles. So he knows you know when the market goes down, the customer goes away, the users like you know left your platform, they will not be panicked and so on. So like you know to really acknowledge all of these things that could be possibly happen, and also like team's gene, right? So like the team, whether they have, for example, like you know already understanding into like finance related like risk management stuff, if they want to do like a debt funding, like these kind of like a stuff. So like you know the consistency of like their work, you know whether they really understand like the market. And one of the questions I always like to ask is really the insights of theirs towards like the market, the problem they want to like solve. I think that is pretty always very interesting, like you know to hear from a founder from a very early stage. So and then like with the project is also really, I think depends on the fields like working in. So like we are, for example, looking into like some projects they do like IFT plus music or like IFT plus like social-fi, like this kind of stuff. How do they, you know, really move like the traditional Web2 like audience from Instagram or Facebook like to their platform, besides the tokens they said they will give to like all of these like a big KOLs and so on, who have like a big like you know like a pool of like fans. So like you know like all of these like thoughts, whether it is like logical and whether they have already thought school, I think could be like really important as well. So one thing I think we tend to ask less is really like the business model, how to monetize it and so on. So I think like especially for early stage, we don't really try to challenge, because there are just like so many ways who could have like imagine like compound like launch tokens, or there are so many just like you know new like kind of like a stuff. So definitely like a team, and also like for me I think the teams like insights into the area where they want to tackle. Yeah.
Thank you. So now I would like to know from you, I mean, you're all based somewhere else. Where do you invest, region, or in which regions do you invest?
Well, the token side is pretty global anyway. So I mean, there are venture hubs, but that's more a global focus. On the equity side, we're especially focused on Europe.
I would say equity side focus on US. You know, teams can be anywhere, but you know, we think that there is good legal and financial infrastructure to execute on projects in the US or Europe. And so we generally like to see the companies legally live there, even if the founders are somewhere else.
Globally, basically. Yeah. Don't really have like a
you guys are cooler than us.
I want to say that, but like yeah, I saw like you say it, but
Great, thank you very much. I have one maybe last question from my side, and then I would also like to give you the last word to tell something which you would like to add to our discussion. I wanted to ask you, I mean, how did you see or did you hear about Crypto Valley Switzerland? What do you think about it? Where do you see its potential now from an outside view? It's interesting for us, even though that Crypto Valley Association in Switzerland has almost half of its members are outside of Switzerland. So we really try to be a global spot here, but I'm wondering what you think now, being in Asia, in Germany, in the US, how you see or how you perceive Crypto Valley Switzerland.
Oh, I'll say something. I'll be nice. Look, I think in any new space, high quality educational content is great. Especially in a space where there's a lot of crap out there, right? And I think in crypto and blockchain, just because it's relatively easy to push this information versus the equities world. And so I generally support and enjoy spending time with any organization that puts out quality content. I think we need more and more of it, and the need for quality content won't go away. I think we'll be more dependent on it over time.
Yeah, I think as well, like these hubs, these communities, it is a great way of interacting among startups. It is a more synergetic and efficient way. And for VCs, it's easy because you can jump into a hub and see what's going on. So we like what you're doing. We've been in contact with CVVC in the past. We've looked at several cohorts. I mean, Switzerland is a great ecosystem in the blockchain space, also a lot due to regulatory environment. So yeah, it's a great place to be, I guess.
Yeah, same. I think that's just like through this call, we have like basically seen like so much like effort like been put into like this webinar. I mean, from like Crypto Valley, it's like so much like work, and then can see like really you guys like want to provide like, a great like platform for entrepreneurs to be connected with the investors, and I think that is just really great work. Like like you guys are doing it, but I think like you guys could have done like also so much more. Like do different things like in different like regions, and then like for your conference also like have more diversities. Yeah, I think that'll be just like even better. But overall, I have been like enjoying it so much like so far, and I think I just tend to be very direct, and I hope you guys don't mind.
Thank you, Jasmine. You're absolutely right, and I think diversity it's a very important point, which obviously we are also it's also challenging us because it's tech still unfortunately is pretty much a man's world. I mean, I see it. I have a son who is 16 years old who starts as an IT engineer, is doing an apprenticeship here, and unfortunately in his class no girls. And I really hope this changes, and I think we need role models like you, Jasmine. And I think, I mean, you did an excellent performance, and I think your thesis you provided us today was also very good and inspiring. And so I hope we really go this path. And again, it would be great to meet you in person, to see you soon here in Switzerland, maybe at the Crypto Valley conference, which is taking place in Zug 2nd and 3rd of June. Also for our audience, if you're interested to join, please register. And thank you again. And please, if you want to, I want to give you the last word.
Go to sleep, Jasmine.
I feel like like my mind is like processing like so slowly, like every sentence I need to like but yeah, it's like this. But like it's been like really a true pleasure to like chat with like all three like gentlemen, and then being like so considerate and so on. And then I think it's just like in general a very exciting like space, and I'm just like so fascinated every day, getting to know like all of these new people who want to explore, who want to learn, and then I'm also like learning with all of the founders, so like of entrepreneurs of like our portfolios. So it's been like a truly, I don't know, like honored and really happy like to be in this space. And then I would like to help, also like really contribute whatever I could. And then also like really looking forward to meet, you know, all of you guys like in Crypto Valley like conference in June. So 2nd and 3rd, don't forget.
Yeah, thanks, Martin, a lot. It was a great discussion, guys. And so I hope to do this again soon. Just because I saw that you were passing on information, maybe you can pass on the email. So either write me directly if you want to talk about your project, startup, and definitely please, just because we have a standard process and which assures that you get answer as quick as possible. Please also include this email. I'm just sending it here. Maybe Martin, you can include that as well. Just to make sure that if I'm not, I always try to answer as quick as possible, but it's easier if you definitely put the pitch address as well.
Cool. Same here. I dropped the link in. It was awesome meeting you guys. Martin, thank you so much for organizing. And yeah, hopefully see you in the real life sooner than later.
Bye-bye. Thank you, everyone.
Okay.
Great
Bye,
to have
guys.
you here. Have a
Take it
good
easy.
evening.
Have a good night.
Bye.
Bye.
Bye.